it is Evan here from the Trade Risk on Friday, March 3rd, here with a condensed shorthand version of our usual stock market weekly video. I am traveling, I'm on the road today, so I've got a on-the-go setup and I'm a little bit pressed for time, but it was a very eventful week out there, so I did want to at least kind of keep up to date here with all the movement going on in markets. And so in this video, we're going to just do a quick 3, 4, 5 charts and call it a wrap, and we'll be back to our normal sort of in-depth, full-length video series starting next week. So if we take a look here at the S&P 500, let's just start here. This is the cash settled market weekly time frame. And so we can see that we finally got a bit of a stance here by the bulls. We saw the market rebound, not initially this week. So initially this week, it was kind of the same old, market where we were sliding lower. And it was really a Thursday, Friday turnaround story that we saw. So when we look here at the weekly time frame of the S&P 500, we've talked about this in our recent videos, kind of going back, but basically we had gone pretty tight and sideways here in this 4,100 zone, and we had a couple of, we had an inside week and then nearly a second inside week, which ended up resolving itself lower. And when we throw this to a daily chart, you can kind of see the key levels that we started to break down from. And it was this, 4,100 zone. And when we started to lose this 4,100 zone, this was the, kind of big area here where we started to get a little more defensive, a little more cautious here as we started to drop below that 4,100. And then, of course, last week we started to then slice below the 4,000 zone. The 4,010 is approximately the area I have on this chart that we've been looking at. And so we've been in this slide lower here without a whole lot of enthusiasm in the market until we hit Thursday. Thursday is when we finally saw a little bit of reaction here. We started the session with a gap down lower. We did probe all the way down to about 39.28, and then we saw that reversal take place. We saw a nice bullish engulfing bar print here on Thursday, and then we saw a gap up and follow through session to finish out the week on Friday. And we did reclaim this 4,010 zone for the bulls here. So a little bit of a win, a little bit of a turnaround story here for the bull case, which is something that we really have been absent of since really the second week of February when markets topped out. It's been this slow kind of chop sideways to grind lower. And so finally, we are seeing a little bit of life here. And so back to that weekly chart real quick, you can see it is taking place at a pretty important zone, although I would submit here that this is still an extremely, extremely messy place here, just generally speaking, in markets. We have not gone anywhere in basically 10 months. We're still moving sideways here. We're still chopping around. So if you are someone that is, a little bit longer term, you're waiting for a more convincing resolve out of this market, we really don't have it yet. We're still just kind of stuck in between lots of little levels here, and the market is really just doing a great job at chopping traders up. So back to that daily chart, when we look here at the relevant levels, I do think it is a win here for the bulls holding over 4,000, call it 4,010. I think the longer we can stay above here, that is good. That is good repair. That is good stabilization. But I do still see 4,100 and then really up to 4,200 as being the big zones here. These are the bigger intermediate term and longer term kind of breakout momentum, point of control areas that I would like to see this market get above to really show that some strength is coming in here and some commitment to this market. As it stands right now, it looks like we're going to get maybe a test of that next week. Maybe we can get up to 4,100, but can we break above it? Can we hold? Can we actually sustain some type of rally? Those are going to be the big questions that I'm going to be looking for really to sort of dictate some of my bias. So for now, I think it's a good stand. I think, it's really tough to be pot committed kind of one way or the other. If you're a strong bull stance or a strong bear stance here, I just don't see it. There's so much conflicting evidence really in both directions to make a pretty good case on both sides of the tape that I just think it's, best served to either be sidelined, a little bit more cash heavy, or just flexible in your approach and tactical and willing to, take a stop out if you need to, or, rotate exposure accordingly. So S&P 500, 4,045, closing out the week here. Nice win for the bulls, nice turnaround. Let's see if they can add to it next week. If we look at, say, the Nasdaq 100, also you can see here 293. This has been basically the zone 293 to 294 that we've been looking at. This has been the December highs. This was the breakout zone in January. We came back down. We broke underneath it. We talked about this exact scenario in last Friday's video, so you can watch last Friday's SMW video, but basically we explored this potential scenario where we break below here and stabilize, kind of stop, run, suck in those late shorts, and then kind of stop, run, and squeeze back over 295. This is the big area for the Qs, and so we effectively just got a retest. I mean, we slightly breached this December highs, November highs range, but we did undercut it, and then we launched back above it to close out the week here. So again, I think you just need to be open-minded that we could squeeze further here up into all the way back up to about 310 or so. 310 though is the big breakout zone. I mean, this is just the big stiff resistance we need to be careful of. We need to keep an eye on. This is what changes sort of the landscape here if the Qs start getting over 310. So far, it hasn't happened. So we're still waiting again if those longer term traders, longer term positional traders looking for more convincing signs of strength in this market. It's really up here around 310, 311. Breaking out above there, I think, does carry some more weight for this market. Until and if that happens, I think we need to be, again, just flexible and just open-minded in our approach here as we chop around some of this short-term, medium-term sort of support and resistance areas. If we look at a couple of other charts here, and we go to the dollar, you can see that the dollar has stalled out, at least briefly. It hasn't quite rolled over. It is still in this leg up here from the beginning of February, basically, but it is starting to at least take a bit of a breather here, giving some, reprieve here to equity markets. If we look at yields, we saw a big kind of turnaround here, especially on Friday. I don't have the whole maturity curve here, but I mean, if we look at just even the 10-year, you can see this nice kind of gap down on Friday, or at least this, reversal that seems pretty loud here. And this is going to be another interesting spot to watch. Do yields finally start to pull down here? I know the short end of the curve didn't really give up as much ground on Friday. I've been a little bit away from markets on Friday doing some traveling, so I didn't get to watch everything too closely, but from what I saw earlier, short end of the curve, a little bit stubborn and sticky, causing that yield curve inversion to still just stay very, very large in its gap. So this is something we're going to keep an eye on. The dollar, interest rates, and then of course volatility. You can see unwinding quite a bit here into the end of the week, back down to 18.5. Could not sustain over that 21, 22 area that we talked about last Friday. This has been kind of the sell-off zone here, kind of buy equities when VIX is up in this 23 zone for the past 3-4 months, and then you kind of sell them when they're back down to the lower end. And really, if you follow that advice, you are getting very close to the sell equities again as VIX unwinds pretty quickly down to lower end of this range. So all in all, basically, nice turnaround story here for the bulls. You got some spaces and stop and places to put some stops against. If you are tactical, if you are short term, I'd love to see this market hold above 4,010, let's call it, and we'll see if we can do that next week. But right now, I still think it's a pretty traders market, and we'll see how we get follow through next week. So that's all I have time for this week. Hopefully everyone navigated it well out there. Thanks so much for tuning in. We'll be back to our normal long form schedule next Friday. Have a great weekend, and we'll see you back here next week.